Most people think of AI as a way to cut costs. I think they're missing the bigger picture. AI is a margin expansion machine. When used right, you don't just unlock hidden revenue, you unlock growth that scales far more efficiently. Let me show you how. Time to have some fun here. So I whipped up this spreadsheet. I want to walk you through the tale of two call centers. One call center that's running traditional lead flow through traditional humans, and then another call center that's augmenting using AI. And I even have a couple scenarios there, but I hid them for now. I want you to wrap your head around just some base unit economics that I'm drafting the scenario off of. So ABC Insurance, let's just say this is the human-based call center. I have some costs here, which is pretty in line with what you would see for an insurance agency that's doing about 11,000 leads per month. Staffing, 10 agents, one manager, $40K per month, plus some hard costs, kind of bringing the whole kit and caboodle to 45.6 per month. And the ops cost per lead is really just that divided by 11,000. Close rate, 2.38 of the entire file. Traditionally based off of kind of what we see in the market. If you're buying about $3 leads, we're going to say this kind of brings you to about a $300 cost per acquisition or cost per bind, right? That's about 262 policies. If you're going to do the math there. And yeah, so that's really what the numbers look like if you're running through the lead flow through a traditional based human-based call center. I wanted to show you what the numbers look like even if the AI call center, the AI augmentation is 50% as efficient as humans. So I'm really setting the bar super low here, and I just want to show you something because it's crazy once you kind of wrap your head around this. Let's go through this first scenario where the AI call center is 50% as efficient. The ops cost per lead on this is actually 50 cents. We kind of repurposed this 40K on staffing, but the close rate on this would be 1.19%. So again, about 50% as efficient as the humans, but the ops spend is about 5,500. And again, this 50 cent mark is all competitors. This is not just Mav. I'm taking a very high cost per lead. This cost should be pretty much in line with any competitor that's doing AI-based call center work for insurance agencies. Basically, if you took this human-based cost and you subtracted, so basically the all-in 45.6, and you subtracted the 5,500, which would be the AI cost, you basically have about 40.1 to play with. Let's just paint a picture here. So let's say you took that 40.1 and you reinvested it into incremental lead flow. This would result in about 11,457 incremental more leads to play with just by reinvesting that in. That's about an incremental 136 policies, bringing the total policies to 266. It actually is an incremental 1.53% more policies bound, and it's actually a savings on your cost of acquisition by 1.28. So the AI call center can be 50% as efficient or 2 times worse, depending on how you want to mention this or refer to this, but still economically come out ahead and cheaper. That is the whole point of me building this spreadsheet for you guys, is really to just detail out where that bar starts. So say the AI call center is 65% as efficient, which would be a close rate of 1.55. You actually are going to be reducing your calc by about 24%. And again, reinvesting the same incremental margin that you've unlocked by running through an AI call center. You're able to add an additional 32% more policies. So the incremental policies is about 177. Your total policies are about 347 per month. And then again, just kind of pushing that needle a little bit, assuming that the AI call center is 80% as efficient as the humans, which brings us to about a 1.9% close rate. You're actually having a 38% cheaper cost per acquisition or cost per policy pound, and you're adding about 62% more policies after the incremental policies to your total file for the month. These numbers are illustration, obviously, but really wrapping your head around what does it mean to unlock that margin and reinvest in the business. Like, AI really has to only be at a certain point as efficient as your human-based call center for the math to really become attractive as it relates to scaling and driving more efficient scale.
So why does any of this matter? In any agency or brokerage, margin is oxygen. The more margin you have, the more options you have, whether that's profitability, reinvestment, or scale. Just remember this: AI expands your margin. What you choose to do with that margin determines your trajectory. I hope you enjoyed going through that exercise with me. If you want to go through this exact exercise with your business, your real numbers, drop a comment, message me. I would love to do that with you. Thanks so much.